Let me paint you a picture. Imagine a country that is quite literally sitting on top of the world's largest pot of gold, but its people are struggling to get by. That's the bizarre reality of Venezuela and its oil. It's a crisis that sends shockwaves thousands of miles away, and they land right in your wallet. So today, we're going to unpack exactly how that's even possible.
Just take a look at this number, 303 billion. Let that sink in for a second. It's a figure that's almost too big to wrap your head around, but it represents something that, on paper, should make one country the most powerful on Earth.
And what is that number? Well, it's barrels of oil, proven reserves just sitting there under Venezuelan soil. As you can see, it's not just a lot. It's the most on the entire planet. We're talking more than Saudi Arabia, more than Canada. That's almost a fifth of all the oil in the world. So the big question is, why isn't Venezuela running the global economy? Well, that's where the story gets really complicated.
See, here's the crucial point that changes everything. Not all oil is created equal, and the vast majority of Venezuela's oil has a very specific and very challenging characteristic.
It's called heavy crude oil. You have to forget about the light, easy-flowing stuff you might be picturing. Think more like molasses or even tar. It's this thick, dense gunk that's full of impurities. You can't just pump it into a standard refinery. To turn this sludge into the gasoline for your car, you need these incredibly complex, super specialized, and really expensive facilities.
And for decades, Venezuela had the perfect partner to handle this tricky type of oil. They had a customer with a massive appetite and, more importantly, exactly the right tools for the job.
And that country was the United States. If you look along the U.S. Gulf Coast, there's this huge concentration of complex refineries that were basically built specifically to process heavy crude from places just like Venezuela. For a very long time, it was a match made in heaven. Venezuela had the oil, and the U.S. had the perfect setup to buy and refine.
This slide really shows you just how tight that relationship was and how completely it has fallen apart. I mean, look at those numbers. Back in the early 2000s, more than 1 million barrels of oil were flowing from Venezuela to the U.S. every single day. Today, that flow has slowed to a mere trickle. So what on earth could cause a collapse that dramatic?
Well, the breakdown of this relationship didn't just happen in a vacuum. It happened right alongside a catastrophic collapse inside Venezuela itself. The country basically stopped being able to get its own oil out of the ground.
Just look at this comparison. Back in the 1970s, Venezuela was an absolute powerhouse, pumping out around 3.5 million barrels of oil every day. Fast forward to today, and that number has cratered to around 1 million, and honestly, it's often been much lower than that. The tap didn't just slow down, it practically ran dry.
So what happened? It was really a perfect storm of problems. From the inside, you had decades of terrible mismanagement. Skilled engineers were pushed out, and there was a chronic lack of investment in just basic maintenance. The machinery literally started to rust and fall apart. Then, from the outside, came the final blow. Crippling U.S. sanctions that cut Venezuela off from its main customer and the entire global financial system.
Now, this is where it gets really important for the rest of the world. Because when you push this much oil out of the formal, transparent market, it doesn't just vanish. It has to go somewhere. And it flows into what experts call a shadow market.
And this shadow market creates 3 huge problems for everybody. First, it completely distorts prices. Oil gets sold under the table at these big secret discounts, so it becomes hard to know what the true market value even is. Second, it creates massive uncertainty. Nobody's really sure how much oil is flowing or where it's going. And third, it raises costs for everyone else, because banks and insurance companies now have to deal with much higher risk.
So here's the bottom line. A transparent market is like a smooth, predictable pipeline. But the shadow market? It's a chaotic mess. These opaque, off-the-books deals make everything unpredictable. And when we're talking about a commodity as vital as oil, unpredictability means wild price swings, and those swings eventually hit all of us.
Okay, so a crisis thousands of miles away in Venezuela, why should that matter to you, right here in India? Well, for a country that's a major oil importer, the connection isn't just theoretical. It's something you feel every single day.
You know, India imports over 85% of its oil. That is a staggering level of dependency on global markets. And what that means is that any major disruption, any price spike, any bit of volatility from anywhere in the world is felt immediately and sharply right here at home.
And what does that feel like in your everyday life? Well, it feels like higher inflation on everything you buy, it puts downward pressure on the value of the rupee, and most directly, it means you end up paying more every single time you fill up your tank. The instability that the Venezuelan situation creates contributes directly to this global volatility that affects us all.
And this brings us to the most important takeaway of this whole thing. The sheer size of Venezuela's reserves is mind-boggling, for sure. But what truly matters to the global market isn't just that it has oil. It's the stability of its supply. It's the disruption of that supply and the messy way it's now sold that creates all these shockwaves.
And so I'll leave you with this question to think about. When a country that has the world's largest oil reserves can be almost completely sidelined by political and economic forces, who really holds the power in the global energy market? Is it the nations that are sitting on all the oil? Or is it the ones who get to write the rules of the game?